yeah, it kind of ties in with the stock of the day as well. I just couldn't look past Adairs today. And it's also, yesterday, if you recall, there wasn't a lot of news out there, and I put a call out on Twitter saying, what shall we talk about? Adairs came up yesterday for Shan. Shan, thanks. Hi, I hope you're watching or listening. We didn't do it yesterday, but worthwhile doing today because, of course, its share price has been tanking, lifting itself up slightly, but still down by 15% today after it slashed its guidance to come in between a maximum of $622 million. So that's down from previous. It says that rising interest rates and the higher cost of living is impacting trading. It's also seeing lower traffic online and in stores since April. Now, I suppose it's trying to help mitigate some of that bad news by saying that its gross margin for the second half remains in line with expectations and that inventory will be finishing below December 2022 levels. But that is not clearly a very good upgrade coming from Adairs, and it comes on the heels of, City Chic. It comes on the heels of Universal Stores, of, oh my gosh, there was more, Lovisa.
Yeah.
Did Lovisa downgrade?
Well, the stock price has been downgraded.
Yeah,
so.
but I think that Lovisa always gets sold off sort of in sympathy when we see a lot of these downgrades coming.
But I would say that, when the first interest rates started to rise, we looked at all of those companies like JB Hi-Fi, Harvey Norman, which would be impacted, pretty quickly. And all these other ones, the Unis, the City Chics, the Levisas, all held up really, really well. They were, they were sort of seemed to be bulletproof. So, we discounted all the sort of the first line of defense, I guess, if you will, which is the JB Hi-Fis and the Harvey Normans. But we said, because Uni and Lovisa don't have mortgage stress, the customers aren't worrying about what's going on, they should be okay. But really, it's across the board, these consumer discretionary stocks are just getting hit. So I don't think there's anywhere to hide at the moment in that space.
Okay, so that would be an avoid altogether, Adairs.
100%, yes.
If you owned it, would you hold it? I mean, like you've suffered so much today.
They've said that the inventory is going to be lower, and that there is a downgrade already that's happened in it. So I'd be getting out. I think you've got to be pretty ruthless at these stages in this cycle and the part of the cycle with interest rates potentially going up next week. It could be another 1 or 2 or 3, happening this year. Inflation data came out higher than expected. Still, people are going out to cafes. It doesn't feel like anybody's preparing for what's about to happen, and that's really quite scary. But yeah, food and cafes, everything's going up higher. I'd just be a little bit cautious.
Yeah, so we had ANZ today, Jun Bei, as I'm sure you know, now expecting another hike coming. Could be June, could be July, doesn't matter. They've upped their terminal rate for peak rates here in Australia. So yes, I mean, there are some names in the retail space that might look tempting, but do you think it's still too soon?
Look, I actually, I'm glass half full, so I always see those sell-off, especially retailers, as buying opportunity because retailers, they move very fast, and because of the fixed cost leverage, it can go either way. Now, but what's very important is you do not want to hold a mature retailer in this sort of environment because there's nothing else help them to grow except the cycle and consumers not spending, so everything's going against them. And if they don't manage their inventory well, then it can be a very dicey situation because it's all fixed cost. And then you can't clear your inventory, then you have cash problems. So mature retailers, you definitely steer away, if not short. Whereas, things like Lovisa, I do like Lovisa because it does have that long-term growth opportunity. In the short term, the share price falling because the consumer is slowing down. They are going out maybe a little bit less. So, the high double-digit comp store growth is not likely to be there. So it is going to be a minor downgrade to come through. But once they come through this tough periods, it's going to grow enormously because of the, the store leverage, and it's global. So, so to me, that is a stock that you do want to watch. With the current sell-off, quite meaningful, it's down like something like 20%, very quickly in the space of a week. I do think it's looking very, very interesting. Perhaps another tough few months as every other retailer is getting downgraded, but it is something that you should look to be positioned in. Adairs is a little bit harder. These housing-related bigger goods, it's just harder to move those stock. People need to feel very confident that the housing market is coming back before when they move houses, that they will buy those things. Whereas trinkets, earrings and things, it's really about, I feel a bit more confident going out, then I start using those things.
Yeah, because Adairs was such a winner through COVID as well. I mean, when would you have been advising people? Like this, you kind of think the writing was on the wall.
Exactly. Yeah.
You
Yeah,
know, so
100%.
really should have been out already when it comes to a company like Adairs.
That's right. And if you look, the share price actually has been selling off, but downgrades never priced in. You have a downgrade, share price down another 15%, and then it will take another 6 months before any confidence return to those stocks. So absolutely, you know, if you hold Harvey Norman, you'll be very, very cautious because that's probably next to downgrades, and the environment is very challenging. And if they start discounting aggressively in this sort of environment, then it affects everyone. Even the top retailer, JB Hi-Fi, might be affected.
Yeah.
But we're really talking about next 3 months is going to be very tough for these names. Post that, we might have immigration, we have students, and you know, things will pick up again. But that's just that next 3 to 4 months is going to be very tough.
I mean, if you're a contrarian investor, I mean, this is perfect time.
Absolutely,
to
you want to buy them.
Start getting in there. And there was a note from UBS today saying that they're pivoting away from the materials and getting into the consumer stocks. Right now, I think that's a little bit too early. But if you're a contrarian investor, this is your perfect time. Everybody's saying get out, and you know the alarm bells are ringing.
Exactly.
That's the time you should be starting to look at these things. 2
stocks you will be look at. One is Lovisa, one is JB Hi-Fi. Is actually looking really interesting. But you probably want to wait for the downgrade. As we can see, the share price downgrade is never priced in. So JB Hi-Fi is something looking very interesting. Every migrant coming into a country is going to buy a TV and electronics and all of that.
A mobile phone,
absolutely,
all of it.
Yeah, and it's on a very high dividend yield as well. Very strong balance sheet and the best management team to manage the inventory. So, but
we'll see.
we'll see.
Well,